Broadcasting from Orchard Park, New York,
and Boca Raton, Florida,
it's the Freight 360 podcast. From freight broker sales tips to sports talk, this podcast is all about helping you grow as a freight broker. We're your hosts, Nate Cross
and Benjamin Kowalski.
Let's talk freight. Happy Thanksgiving, everybody. Well, depending on when you listen to this episode, Thanksgiving may be in front of us or behind us. But either way, welcome to the fall holiday season and welcome back for episode 167 of the Freight 360 podcast. We got a special one today. We've got some guests on with us from Loadsure. We'll get to them in just a second. But first, this episode is brought to you by Blue Book Services. Blue Book is the resource you need if you're transporting fresh produce. Their online database contains thousands of companies throughout the produce industry supply chain. You can easily search their database to generate new sales leads, and Blue Book's credit ratings help you avoid companies with high credit risk. Their team can even help you resolve disputed loads. To learn more, go to producebluebook.com and click on Join Today. That's producebluebook.com. All right, so we have some guests with us today, but first I gotta ask you, Ben, how's the weather in South Florida versus the 80 inches of snow that I got here in Orchard Park?
It got a little chilly over the weekend. I actually had to wear socks and long sleeves Saturday night for light up night, but chilly for me was 74. You had almost as many, you had probably more inches than we had degrees as of right
That's
around
very,
there.
very true. Very true. So anyway, we've got a special group of guests with us today from Loadsure. So I've got Jim Hyde and Johnny McCord with us. Guys, welcome to the show. It's great to have you on here.
Thanks, Nate.
Yeah. So for those of you who are not aware of Loadsure, I know your company name has popped up more and more in the last probably year or so, at least from what I've seen. And you guys have a really good partnership with DAT, who's a good trusted partner of ours. So before we get into today's episode, which is going to talk about insurance and all risk policies and some things like that, just wanted to give you guys a chance for those who don't know you, just kind of who you are, what you do with Loadsure, and what kind of expertise you bring to the table. So, Jim, we could start with you. Give us just a brief rundown for folks that aren't familiar with Loadsure, with yourself.
Yeah, absolutely. Thanks, Nate. As you said, my name's Jim Hyde. I'm the Chief Operating Officer and co-founder at Loadsure. Been employee number one since the beginning, so it's been a great ride. My background is worked for DHL Supply Chain for 20 years. Started out with a very small trucking company in my path through my logistics career, and all the way to running a lot of small party third-party carriers for home delivery before I left DHL. And then I went to go work for a small freight tech startup called 10-4 Systems. Did that for 4.5 years. 10-4 started out as a freight marketplace and then pivoted to transportation visibility. And been with Loadsure ever since.
Nice. Johnny, how about you? And you are, so the audience understands, when you hear Johnny's voice, he is not in the same location as Jim. But Johnny, what do you got for us?
Yeah, thanks, Nate. Very much on the other side of the pond over here in London, UK. Experiencing weather probably not dissimilar to yours, Nate, but I'm the CEO and founder of Loadsure. It's a very different background from Jim, and that's why we partnered. So I'm a London market insurance broker. Have spent 20 years providing freight and logistics insurance to the freight industry globally, and started to specialize in the last 15 years in North American freight and logistics. And I learned firsthand of the pain points of the freight industry and became very passionate about solving them. At the end of the day, insurance should be here to support communities, and I think the traditional insurance market has done a disservice to the SMBs of the freight industry in particular, and that was one of the sort of core objectives of Loadsure, to provide AI-powered pay-as-you-go freight insurance that can be purchased at a click of a button as and when needed. So when I was stepping away from the traditional insurance market to build in insurtech, I realized pretty quickly on that I needed more than my insurance knowledge of the freight industry, and was lucky to find that subject matter expertise in Jim, and off we went on this journey together. So that was almost 4 years ago, and here we are, delighted to sit on your podcast and talk to your audience.
Yeah, match made in heaven between the two of you guys. I like it. That's awesome. And it's funny too is so Ben and I, we live 2,000 miles apart from each other or something, 1,500 or something wild, and people often think that you guys probably are located in the same area, and it's like we're actually not. And I think it's fun to me to be able to have a working relationship with someone that is not right next to me all the time. You know what I mean? You kind of have different aspects, and you kind of bring something different to the table. So it's cool to see that you guys have a similar situation as Ben and I have. So, well, anyway, before we get into the topic on insurance and all that good fun stuff, do have to bring up a quick sports update here, because we have, we've got a special time in the world of soccer actually going on right now. The World Cup did it just start? Was it this past weekend?
It started, yeah. The opening ceremony was yesterday.
Okay.
The first game was yesterday. I think Ecuador beat the home hosts, Qatar.
As I say, it's in the Middle East, right? So
yeah, Qatar. So yeah.
What's interesting is one of the funny sports articles I read about the World Cup was that I think is it like Budweiser, one of the big beer companies, is a big sponsor, and they're like, you can't even buy beer at their stadium.
Well, I don't know if you know, but the English football fans are known for their hooliganism, and obviously that's fueled by alcohol. And they announced 4 days before the start of the World Cup that there was going to be no alcohol served. So I'm sure there's going to be some frustrated England fans, but
they'll find a way.
Yeah, they'll find a way. But we went ahead and won our first game, which 6-2 against Iran. So that's always
nice,
always pleasing. And then we take on the USA on Friday.
It'll be a big match coming up there. Who's the? So I'm not a huge soccer fan. I'll follow like the Olympics and stuff like that. But who's like the favorite team going into it this time around?
I think,
according to like the sports books, not according to Johnny.
Yeah, no, I wouldn't jinx us. I think France are definitely up there, and
okay.
I think Argentina are certainly up there. So Brazil. I'm not the biggest football knowledge base spectator, but there's definitely France is in the mix, I think.
Gotcha. I'll be honest, the most I know about, and it's funny how in the US we call it soccer, but everyone else calls it football. I learned more about the sport from watching Ted Lasso than I knew prior to. So that's my realm of experience and exposure to the sport of soccer or football, as it's known elsewhere outside the U.S. Yeah. Anyway, Ben, your Steelers had another loss this past weekend.
It was okay first half. They couldn't hold on to it. The second half is what it is. I mean, The team is what it is. It's a rebuilding year. Can move on.
Bills had a bounce back. Got the W against Cleveland. So we had a home game that couldn't happen in Buffalo because of the snow. So we played it in Detroit, which we actually did the same thing like 8 years ago when a massive snowstorm came through here. So, but either way, Bills are playing on Thanksgiving in Detroit, actually, again, against the Lions at 12:30 Eastern. So I'll be kicking off my Thanksgiving early with, Josh Allen jersey on and something to drink in my right hand. So anyway, anything else going on in the world of sports? Jim, who's your team? What do you follow? What's your go-to?
Yeah, I'm a hockey fan.
Okay.
So yeah, being in Denver, it's good to see my Avs win the Cup last year, and watched the game last night. They it was 4-0. They did quite well. So yeah,
there you go. It's always good to have a good sports team, unlike the Buffalo Sabres, who every single year make us Buffalonians think we've got a shot, and then we remember that it's the Sabres. So Anyway, Ben, let's give a shout out to our friends at DAT, and then we could talk insurance.
Taking the guesswork out of freight with DAT. The DAT Loadboard Network is the largest on-demand freight marketplace in North America, connecting freight brokers with available capacity on any lane. Grow your business with tools that allow you to find new business partners, plus you can quickly qualify and onboard new carriers. And with the industry's leading freight rate data, you can make clear and confident pricing decisions. Check out the show notes for a free month of Power Express or Trucker's Edge.
Absolutely. So without further ado, I know we had a soft intro to Jim and Johnny there, but we're here today to talk about insurance and specifically we're going to hit on the concept of all risk insurance and kind of how you can use it as a value add to your customers as a freight broker. So we already mentioned Loadsure is the name of your guys' company and been around 4 years or so from what you were saying. And I do want to mention for anyone, if you're trying to find out how do I learn more about Loadsure, you can go check them out on the DAT1 platform, or we'll have a link in the description box or the YouTube video show notes or wherever you're consuming this content. We'll have a link at the bottom there to learn more about these guys. But so I want to kind of start at the beginning. You guys already kind of talked about how the company started, but what was the problem that you guys identified that you're like, hey, we need to come up with this company or this product or service, and how like Loadsure was built around that, obviously. But where did you guys? Was there a pain point or something that came up, or what kind of jogged or sparked your interest in putting this all together?
Yeah, I think going back to my experience as a London market insurance broker, and always trying to better serve the large enterprise customers as opposed to the SMBs, as I mentioned. The annual programs were very expensive to purchase, and they gave a broader form, which is the all risk form that sat on the first party policy. But that was really available only to large enterprise companies that were more sophisticated purchasers of insurance, and the SMBs were left sort of wondering what coverage they were needed, and they were understanding that carriers had MTC policy or the carrier's liability policy to protect them, and it's always sold as cargo coverage, and it's not necessarily fully understood because the liability policy responds differently to a first party policy, and Jim explains this more elegantly than I do, so I'll hand that bit over to Jim.
Yeah, and the real difference it's in the name. We're insurance guys. We need to make it easy so we remember it. But the motor carrier liability policy, it's a liability policy for the motor carrier. So it protects the motor carrier's liability in handling the freight, particularly their negligence, right? So a motor carrier liability policy would only pay in the event the carrier has some sort of negligence involved. So they didn't lash your tie correctly, or there was an accident, or something along those lines. Whereas an all risk policy, which is what Loadsure provides, is much broader form. As Johnny said, it covers acts of God, loading and unloading, unattended vehicle, fictitious pickup, inside theft. So all of these things that we all know can happen, right? But they're outside of the carrier's control, and therefore the carrier's policy wouldn't necessarily pay on those events.
Yeah. So, and I just want to kind of hit on the concept of all risk and kind of how I've seen it used in the past. And we can kind of dig into Loadsure's platform in particular. But if you think about this, if you've got, if you're a freight broker and you've got a customer that that there's a risk of some kind of claim on their load, right? And it could be that just that hey, this is a very delicate piece of whatever it is, right? And we can't even run the risk of any kind of loss on this. Or maybe it's a commodity that just tends to have a higher rate of claims, like a berry or some sort of a fresh produce or something like that. What I like about the all risk policy is you have the ability to purchase for a single load an insurance policy that will take 99% or more of the headaches away from that claims process. So even if there is damage and it's the carrier's fault because they had an issue with their reefer, or they didn't properly secure it based on how they were instructed to or what they were supposed to, what I like is that the all risk policy takes that first position to settle that claim for the customer instead of having to wait what we know can be 6 or 8 months for a standard carrier's cargo policy to settle a claim with a customer. And on top of that, when your customer knows that there's going to be claims every now and then, they're going to rather have the situation where it's going to be handled quickly and with as little amount of pain as possible, instead of going back and forth trying to determine who did what wrong and this and that and the other thing. And on top of that, they have a freight invoice that they're expected to pay in a lot of cases too. So that's what I like about the all risk policy. And I've seen a lot of brokers where they'll take whatever the cost is to buy that policy, and they'll absorb it into their price to their customer. So, hey, Mr. Customer, Mrs. Customer, my price here for you guys for this load includes an all risk policy that's going to cover everything the carrier has on their insurance policy, but it puts us in first position, and it also covers these other things that we otherwise wouldn't have covered for you. So I definitely think there's certain customers where it's hey, I do it on every single load type of thing. And there's others where you may want to look at that situation and decide, is it worth, or is it a situation where it would warrant the need or desire for a policy? And it's a good place to start too, just to educate your customers or your shippers on what's available and what's out there. Because a lot of them don't know that these policies exist. And they'd be willing to pay more money if they can get that added for their shipment. So that's my take on all risk in general. So Ben, let me ask you this, Ben, have you ever added an all risk policy on any of your customers? Or have you not really added?
I had a customer that would have been like a perfect fit for this. The customer was Alcoa, and we shipped a lot of aluminum coils for them. But there were specific aluminum coils that were like way, way higher claim percentage than every other coil they manufactured. And they were the ones going to Colorado. They were going for beer cans. They were the ones that we shipped out to Coors. And because they were such thin gauge that like no matter what we did to secure them, road debris or something would damage them. Like even like the smallest little dent, they said would go so far into the coil because it was so thin, and no one ever wanted to take them. And like this would have been a perfect solution for that, because you could have just applied it, because we had carriers that didn't want to take them. I mean, they were literally, putting cardboard around them, bubble wrap sometimes, and then tarping them. And still, like, you were getting these, claims at a much higher percentage than every other coil we ran. And this would have been a perfect solution for that.
So I'll add in there too. At a previous brokerage that I worked for, we had an all risk policy option to add on from another company that I won't name, but we ended up dropping them because they tried to fit everything into a one size fits all box where they said, hey, here's your price. And, it covers everything. And then quickly it was like, well, the price is now double and we're excluding all these commodities. And we're like, what's the point of so what I like about what you guys have done, and we've talked quite a bit before this episode here to kind of understand your company and what you guys offer, is it's not a one size fits all, right? And I kind of want to talk about so obviously being a partner with DAT, if someone's on DAT and they're working on a load, they have the ability to add the insurance through Loadsure very quickly and easily. But can you guys talk through that process on how the insurance is added, and then what goes into the algorithm, I guess we'll call it, of determining what the cost will be for a specific load? What are the factors that you guys are looking at? Because you're obviously not trying to say, hey, everything can fit all in this one box. It's going to just depend on a lot of factors. So what does that look like?
Yeah, no. If I'll talk to sort of the algorithm and the approach and the differentiators to traditional, all risk policies and what makes us so dynamic. I think what the whole core of Loadsure is to be driven by data and to break everything down to unprecedented granularity, so that we have a real risk profile and able to provide a risk score to each and every shipment, because every shipment is different. Every shipment has a different behavior, because there's different drivers, different equipment types. It's going through different lane, different seasons, crime zones, etc. And the traditional insurance market bucket commodities, bucket a number of risk factors to provide an overall risk score. But what we do is obviously underwrite at unprecedented granularity to give our customers a true and accurate rate at that shipment level. So therefore it's sustainably priced, it's cost effective, and you can buy it as and when you need it within the customer journey of your platform, which is obviously DAT here we're talking about. And Jim is helped design the journey of embedding us in DAT, because it's all about efficiency. So Jim, I'll let you explain how we can really provide this through the platform.
Yeah, absolutely. And the integration with DAT makes it so easy to be able to add that all risk policy at the shipment level as and when you need it. Within Edge and Express, we're in the tools section on the left-hand side. You just click that tools section. You click the shipper's interest button, and you're able to purchase a policy. You don't need an account with Loadsure. Your DAT account works with Loadsure. You just go in and buy that policy that you need. You can do it under a minute. In DAT 1, where we're both in the tools section and on that dashboard page. So it's very easy. You go in, you ask for the amount of insurance that you need. You pop in the commodity type, the origin destination. You give us the assureds information, which is usually the shipper, and you're able to purchase the policy right there. And like I said, it takes under a minute.
So that's that. I want to talk about that process and what you guys, the details that you're looking for, compared to what I've seen in the past with other companies that clearly didn't sustain long with that model because of certain things. Like, for example, if me and Ben went to get insurance for our car, right, or for our house, they're not going to say, all right, here's your policy, you both pay the same amount, because it's not the same. My house might be different from his house and a different zip code, or my car gets driven a different number of miles than his car, or there's all these different factors, and that's kind of how insurance should work, right? The higher the risk of a situation, the more it should cost to insure, because it's likely a higher percentage chance that there's going to be a loss, versus a lower risk should have a lower cost. Whereas I've seen other actors in this all risk world where they say they don't ask where the origin destination is or how many transit days or what the commodity is. It's, hey, if it's a full truckload, it costs this much. If it's a LTL, it costs this much. So I like that you guys actually you have an intuitive thought process behind pricing out these policies and what you're offering. So on that note, are there excluded commodities, or is there a certain type of commodity where you're going to assume, hey, we can still cover, but it's probably going to be, these ones will be less expensive or more expensive, or how does the commodity side of it work?
Yeah. So Nate, to your point, and I have a saying, that there's no such thing as a bad risk. There's such things as bad terms and conditions, and that's what has tripped people up in the past. And we are data driven, and therefore we are dependent on the data to provide accurate, sustainable pricing. Being data driven, like anyone who understands data and technology, you have to start at a point, and you have to teach and evolve your technology and your algorithms. And our black box by the day is getting bigger and bigger the more data it ingests. So yes, we have a broad list of commodities that we cover. There are exclusions that we have, which ultimately mean there's a referral process. It doesn't mean no, but our technology hasn't quite got to that point yet for it to look at some of the more complex commodities. But in time, that will get to that point. So there's a referral process in for us to then review and put very quickly terms on those excluded commodities, or there could be excluded commodities that we just can't touch, like arms and ammunitions, for example.
Okay.
But generally we will always look to find terms and put up terms. So I think one of the main sort of importance for us is to show firsthand our value proposition, and DAT have allowed us to do that in their environment for their customers. And to your point, Nate, you made earlier, is there is a lack of awareness of what's out there, and I think DAT, given their reach and their distribution, were able to educate their customers and provide education and insights on how to be better at mitigating your risk and managing risk. And of course, there's the risk transfer piece, which is the purchasing of the policy in the first place. But with our evolving data set, we're also looking to advise and support our customers with actionable insights and guidance as well. So, it's a growing product to offer customers of DAT.
And isn't that the goal? Aren't you going to be moving to a place where this data is also, or is it already, where it's given back to the brokerages so that they can, add value back to the shippers in regards to just the information, right? I know we talked about this a few times where it was like, hey, now you're able to see like what the claims percentage is in these areas, this time of year, around here, what's going on, to have that visibility back to offer that to your customers?
Yes, absolutely. It's very much the actionable insights and the knowledge. We provide a holistic lens to all our customers to ensure that they know what's been covered and what is being covered, and it's a growing offering. So we're not we'll never be finished. But those actionable insights are certainly very advantageous, and it helps us continue to provide more cost-effective insurance because it creates a complete ecosystem. Nobody wants to incur a loss in the first place, especially not in today's world with the supply chain. So if we can help mitigate that and also help reduce the cost of insurance, then it's a win-win situation for everyone. And I think the thing that most people don't necessarily have the right coverage in place is because they've been fortunate enough not to incur loss. But there's some pretty frightening stats out there with regards to cargo loss. I think last year alone there was almost close to 20 billion of value of losses due to theft, and
20 billion in theft.
Yeah. And just under 90% of those claims were through trucking. So,
wow. And the other thing I want to point out, you talked about the disconnected information. It never ceases to amaze me when I'm talking with a client or even just with a shipper at, honestly, like sometimes just shippers' lack of understanding of the insurance they think they're imposing or requiring of brokers and carriers, right? I mean, Nate, how many contracts do you probably redline a month that say, we are not a carrier, we're a broker, this policy won't cover anything. And you just sit there going back and you ask them, you're like, well, where is this coming from? What risks are you mitigating? And you'll often hear, well, I don't know. This was the document that was created a decade ago that we're just told to have signed. Okay.
I think my favorite is like shippers think that they're like, oh, we want you to have contingent cargo. And they think that contingent cargo is basically like, oh, if it's denied by the carriers, like, oh, we've got the contingent cargo. And it's like,
right?
That's not exactly how contingent cargo works. Like just because the carrier's insurance denied the claim doesn't mean you can come file on our contingent cargo. I mean, every insurance policy is only as good as what it includes and does not exclude. And there's a ton of exclusions on contingent cargo policies. I think in the 41 or 42 years that the company I work for has been around, we have had a contingent cargo policy pay out once in over 4 decades. So, but I have seen in my career, I have seen actually one of the brokers in my company, the first load he moved, he did an LTL load. In that LTL co-brokerage agreement we had in place, we were able to buy an all-risk policy through them, and he actually had a claim on his first load. So I've seen all-risk policies pay out far more than a contingent cargo policy. Contingent cargo policies are super broad, and I don't know why a lot of customers like to think that they're worth more than they are, but the reality is an all-risk policy on a specific load is exactly that. It's designed for that specific load, not just kind of a catch-all blanket to do that. So what I'm curious on is, if you guys can speak to it, is what does that process look like? So I buy an all-risk policy through Loadsure on DAT for, let's say it's a full truckload of, I don't know,
beef,
lumber, and the
truck bacon
lost or something. I don't know, right? What does the process look like for the filing of the claim, the timeline that's expected, and how does this all pan out in the event that the policy has to be claimed on?
Yeah, we have a electronic first notice of loss system built directly within our portal. So anyone who buys a policy through DAT, through Loadsure, will get an email with that link embedded in the email. The link is also embedded in the certificate, and it's available through our website. But the portal asks for some very basic information about the claim. It automatically pulls in the information from the certificate. We just ask that the claimant uploads a handful of documents. So the packing list, commercial invoice, proof of delivery, and adds their contact information. And then all of that information is fed into a decision management engine that we've developed. And that decision management engine will take a look at that claim and determine if it's something that it can adjudicate and settle right there. But if it can't, then it has everything nicely, neatly bundled up together that it hands off to our claims administrator. And then our claims administrator has everything they need to kick off the claims process and get that settled very quickly. And yeah, I think most claims we get settled within a couple of weeks.
I was going to say, usually I've heard like the goal of an all-risk policy is typically like a few weeks, but definitely less than a month. Whereas, I mean, I've seen traditional claims through a carrier's policy I've seen them go over a year. It gets wild. Now, to clarify, being that you're in the first position, the reason that you can offer your policy is that you do also have if I'm correct, you have the ability to then go and recoup what you paid out from the carrier's policy. Is that how that works?
Yeah, we will make the commercial decision to subrogate against the carrier's policy, but in all honesty, most of those we let go. They're just not worth it. Yeah, it really depends on the circumstances if it's worth subrogating, if it's egregious negligence, if we know the carrier policy is going to pay, but a lot of carriers are our customers as well. So, we have to look at those things as well.
So that makes sense.
And the most important piece, anyone knows when purchasing an insurance policy is you don't see the value until that claim occurs or that fortuity occurs. And, we are very focused in expediting that claim settlement process. Our technology is fairly juvenile, and the algorithm in particular. So the more claims we experience, the more confidence there is in the model, and therefore, we have and do settle claims in near real time and continue to advance that. So again, it's all about continuing to add customer value, putting our customers back in that financial situation they were prior to a loss, letting them get on with their business, not waiting months and almost a year to have to sit on a claims file. That's our responsibility at the end of the day. We want our customers back focused on their business and doing what they know only too well to do.
So let me ask you this. I'll give you a scenario. If So let's say a customer of mine has a certain commodity that they want me to get moved for them, and a carrier that I talk to has an exclusion for that. Can I then buy an all risk policy through Loadsure, and that will cover that customer's freight, even though the carrier doesn't, even though they have an exclusion on it?
Correct.
Absolutely.
Okay.
That's one of the big values that we bring is we do cover a lot of things that motor carrier liability policies exclude: electronics, alcohol, seafood, fresh and frozen food, wood products, egg products. I've seen excluded on carrier policies.
Mm-hmm.
We do, while we do have a handful of exclusions, as Johnny mentioned earlier. What we do cover is really broad in scope, much broader than most of the solutions out there.
I mean, that's huge right there, because I've seen so many times, and we have a listener question. We'll get to it towards the end of the show about this, but so many times I've seen people that they think, oh, I can't find a carrier that, like the examples you gave, frozen seafood and eggs are like two that I've seen real world in the last year or so, that folks are like, man, I just can't find a carrier who actually has this covered on their insurance policy. So it's good to know that they have an additional outlet there in the event that they do run into those carriers that have exclusions. So,
Oh yeah, and it also widens their whole ability to source carriers, right? You can basically put on any decent carrier now because you don't have to dig into that. The other thing I keep thinking about too is, especially in the market we're in now, like there's a huge value add for brokers that understand this and can convey this back to the shippers, right? Just sitting down and going, hey, I know it's towards the end of the year. Can I take a look at, how your claims have been over the past year? I mean, I can count on one hand the amount of brokers I know that ask that ever, right? And if you can dig into that and find out that they're pretty high on certain lanes or certain shipments going to certain customers, this is a perfect solution. And it doesn't cost the brokerage anymore. And it's flexible. So it's not as if they've got to go. And that was the other thing same thing. Like I had a customer, we were looking at like over 6 figures to buy the insurance policy to run for this customer with no guarantee or commitment on the freight side, right? With a product like this, you can have that flexibility. You don't have to outlay that big amount of cash up front either and hope you get enough business to cover it either.
Absolutely. And Ben, just to your point you were making earlier, we've got customers that have expanded their capacity 5 times, using our products and just given them a massive competitive advantage over others that aren't. So, there's a real use case there.
I want to say this to the audience too. For those of you who are like, oh, insurance, it's so boring. Well, you probably haven't had a claim or a big issue like that yet, because I guarantee you the first time it happens, you will remember, and it will leave a lasting memory in your brain. It's like I have seen people that have gone a decade and never ran into a claim in their life, and I'm like, you're like the only person that's ever happened to. And then you get somebody else who, first time it happens, they're like, I'm never again. Every single time moving forward, I'm going to have this covered on there, because you can very, very easily lose a customer over a situation like this. Because
I was just going to bring that up.
It's our job as brokers to make sure that when we vet out a carrier, that we're vetting out that the customer or the shipper's freight is covered in the event of damage or whatever the case might be. And if we were negligent and booked a carrier that had an exclusion on of certain commodity, and we didn't do anything to fill that void or that gap in coverage, it's ultimately on us. And if we then refuse to make the customer whole, you're definitely going to lose your customer, not to mention potential legal action from that shipper to recoup what you were responsible for. So
I was going to point out, I mean, it's pretty commonplace for larger brokerages to cut checks to save customers just because they don't want them to go through the claim process, right? Like I remember there was a shipment of razor blades at a very, very large brokerage. It got stolen. It was well over 6 figures, but they were doing a lot of business. And the customer's like, look, if we got to go through a claim process, we're just going to use, somebody else. And they literally cut the check. It was over 6 figures and said, look, we're going to go make this whole, because the customer's like, hey, look, we'll go through the claim process, but we're not working with you while we're going through it. And it was a tremendous loss if they would have lost that customer, right? And that's pretty commonplace for to save the customer to go and eat that loss, or at the very least, have to come up front with the cash.
Yeah, I mean, I've even had situations where we made the business decision as the broker to cut a check for even a portion of the loss to the customer because the carrier, the traditional claim process with the carrier came back and denied a certain percentage or portion of it, and they weren't going to pay what we felt was truly the amount that that customer was deemed as a loss. So we've made decisions in that part because I mean, is it worth it to write your customer a check for $5,000 if it means you're going to continue to get $1 million of business a year, or to tell them to F off and then you get no business? But again, a situation like that could be prevented if you add this additional layer in there to be able to fall back on if that situation were to arise again. So
I'm often asked, when should I buy all risk insurance? And it sounds to me it sounds obvious, but on every shipment you should purchase all risk coverage because that is ultimately protecting first party physical loss or damage, full invoice value of that commodity being moved. And there's too many horror stories out there that it hurts when it isn't insured.
definitely. So we got we're gonna get into a couple of Q&A questions here, and a couple of them are on insurance, and then we'll wrap things up here. But first, we'll give a shout out to our friends over at Lean. Lean Solutions Group is the industry leader in nearshore staffing with offices in South America, including freight broker back office operations, accounting, tech development, business development, marketing, customer service, and many other positions. To learn more about the vast solutions that Lean has to offer your freight brokerage or agency, visit them at www.leangroup.com. All right, so we'll hit the two insurance questions first here, and then we've got a sort of a prospecting one towards the end. But the first one, I think we kind of already covered this. This came from our Facebook group, I believe. Can a freight broker purchase insurance for high value loads if the carrier only has $100,000 in coverage? The quick answer is yes, and we've done this a lot at my company. But I'm curious, Loadsure folks, can you do through Loadsure? Can I, as a broker, come to you and say, "Hey, I've got a $200,000 shipment, and the carrier's got $100K. Can I come to you and buy either just $100K by itself or the full $200K? How would that work for a per load basis?"
Yes, you can. Our policy, responds from the ground up, so it'd be the full 200,000, but it's very, very cost effective. It's certainly more cost effective than spike insurance that you would buy for that additional coverage. But obviously, we just talked about the value add of all risks, and spike is obviously a top up on top of the liability policy. So it's a win-win all round. And so to the answer, it is yes.
Yeah,
That's
Spike is
awesome. I've had go ahead, Jim. Sorry.
I was going to say, Spike, you're typically waiting for that base policy to answer before the spike kicks in. Whereas, an all risk policy, you file the claim right away. You're not waiting for the carrier policy to pay or decline the claim. And that's the important thing. You're not waiting for someone to play the Carmack game, right? You're able to file that claim right away, and it's in our best interest to pay that claim right away and get it settled.
So what's interesting about this is I've seen a lot of times, like in the flatbed or open deck world, where a carrier might only have 100,000, or sometimes they have 250, but they're asked to haul a piece of equipment that's valued at like 300,000 or maybe 200 when they only have 100,000 in coverage. But having the ability to quickly get that quoted and purchase the policy instead of waiting for, "Hey, Mr. or Mrs. Carrier, can you go quote yourself out with your insurance agent on getting yourself a spike policy on this specific load?" It's like, nope, I'll spend the 1 minute or less, whatever it takes to get it quoted and purchase it myself. Carrier doesn't have to spend the extra money. It'll be reflected in their pay rate, and the customer, doesn't matter to them. They know they're going to pay a little bit more for a load because it's a higher value insured product. So they don't care if it's the broker buying the policy or the carrier. They just want to know that, hey, is my stuff transported properly and is it covered in the event of any kind of claim? So that's like the time saving alone in those scenarios, I think, is huge. So, all right, next question. How do I know if a carrier's insurance excludes a certain commodity? Well, no one just advertises a list, right? So like if typically I think there, and I'll let you guys speak to it and Ben as well, but there's commodities that you'll come to find during your journey in transportation that certain insurance carriers tend to not want to cover. And that could be certain types of produce that have a high risk of claims, like your berries, strawberries, blueberries. It could be frozen seafood, like frozen crab and lobster. I've seen a lot of. It could be beer. I mean, there's a whole slew of them that are common. But is there? I guess it. So someone asked you guys this question, Jim and Johnny. How, what would be the best suggestion if they don't know, like, how do I know if this carrier is excluded or not? Do you just ask the carrier? Do you recommend they get it written in writing from their insurance company that it is covered? What's kind of a common course of action there? And how do you guys go about doing that so brokers know that their product is, or the shipper knows that their product is insured?
Yeah, I to your point, there are those commodities that are a given. It's not going to be excluded, but you do learn very quickly what commodities to look for. You had mentioned eggs, wood products, alcohol, fresh and frozen foods, seafoods, those sorts of things, especially berries and things. The only way to really know it's not going to show up on the Accord form. You have to dig into the policy, fortunately or unfortunately. And that's the only way to really know. How we try and make that very transparent as soon as you go in. And so if you're going into DAT and you go and buy that policy, as soon as you pick that commodity, we're going to tell you exactly what's excluded within that commodity type. And for the handful of exclusions that we do have, we're very transparent on that. It should be black and white, what's covered and what isn't.
Nice.
I want to ask you guys a kind of a follow-up question. Do you think that as time passes, shippers will move towards insisting on all risk policies as opposed to contingent as it becomes more prevalent? I mean, it's really in their best interest. And it kind of shocks me that to some degree they aren't already. Like if I'm a shipper, I'm absolutely, I mean, as long as I don't see why you wouldn't have this on all of it, right? Especially knowing how little contingent pays off. And knowing, from the shipper's point of view, how many times they've likely been burned in these scenarios, right? Do you think it's going to be more of a just acceptable reality moving forward?
Yeah, I definitely think so, and I think the larger, more sophisticated shippers certainly are more sophisticated purchasers of insurance as well. So they might have their own in-house policy, but the SMBs, as they become aware that there is actually more insurance products to better serve them, then I think there will be a shift in the demand and requirements of a shipper when handling their cargo. And this is what Loadsure is about, and our partnership with DAT to provide simple access to insurance as and when you need it, and that's going to make a difference.
It's so funny. There's a shipper that was requiring an 8-figure contingent policy that I saw in the past year, right? And it's like, you're going to require roughly $10 million right in contingent when you could have likely required probably $500,000 in all risk, and you would have been far better covered, right?
It's wild. I think
Blows my
what
mind.
it comes down to is they don't understand what is actually covered in a certain policy. They just look at, like Jim said, the Accord form, right? Like that insurance certificate will show a policy limit, but it doesn't give you a narrative on, hey, here's what it actually covers in the event of A, B, and C, and it excludes X, Y, and Z. It doesn't say that. It's just a proof of insurance. Here's my policy. Here's the underwriter. Here's the dates. Here's the limits on it, and yada yada. Nothing in detail. So that's just a lack of education.
Absolutely, and the other piece of lack of education is the tariff that sits behind it. It's not full invoice value; it's on a weight % ratio, so it's penny on the dollar at the end of the day. So it's crazy not to have all risk coverage on your commodities that are being moved.
So you, just to clarify, you did say Loadsure covers full invoice value?
Correct, yes.
Nice. Good stuff. All right, well, the last question here, and this is more on prospecting for Ben and I. How do you find hotshot loads? Well, if this is a carrier, you go to a hotshot load board like a Selectus. But let's say someone wants to prospect hotshot business, Ben. Anything that you know of specifically that is beneficial to them as a broker? I mean, my gut tells me like this traditional stuff that I would do any other way. Talk to some. Well, first of all, know the commodities and where they are, but you can even talk to some hotshot carriers and say, "Hey, what do you guys like to haul? Where do you like to run? What kind of because they know these locations that they've gone to or delivered to. Anything in the hotshot realm though that you've seen or
I would reiterate what you just said. First is if you can talk to the hotshot carriers, talk to them, ask them where their desired loads are, where they want to go. I think, some other, obvious niches are white glove usually goes towards hotshots. Expedited tends to go in hotshots. A lot of stuff surrounding airports uses a lot of hotshots because of just the nature of the way the freight comes in. So just connecting, I would prospect around them. I would prospect forwarders because even if forwarders might not be tendering them, they are aware of where they're giving them to. That's probably where I would start.
Yeah, I was going to say freight forwarders and really anything around the airport scene tends to be where I've seen the majority of the business move from. So, which is why you tend to see freight forwarders that literally their branch name is the airport code because they tend to be located in those areas, right? An expedited load comes in to a forwarder, gets on their dock, and boom, a Sprinter van might deliver that out to wherever it's going or a box truck or whatever it might be. So, good stuff. Good questions. Well, Loadsure folks, I know we're going to have a link in our show notes, but is there a preferred way? I know you said you can access the Loadsure quoting system right on DAT, but is there another way that they can check out more information on your product? And I know we're going to be releasing a demo on it here probably in the next couple of weeks, but is there anywhere you would direct folks to learn more?
I think directly to our website outside of DAT, which is www.loadsure.net, or you can look both myself and Jim up on LinkedIn and find all our company details and follow us on LinkedIn for the latest and greatest releases that are coming out.
Nice. Anything cool that's up and coming in the Loadsure world that we haven't already talked about?
We've got a lot in our pipeline.
Okay.
And we obviously talked about our active risk management piece, which is very exciting, and a lot more products to support the freight industry. So best to stay tuned and follow us on social media, and obviously get all our insights through DAT as well.
Nice. Awesome. Jim, any last thoughts or anything from you?
No, just really pleasure being on your show. Really appreciate the time, and it's been great to interact more with the community. So thank you.
We love having folks on like you guys. So it's funny because Ben and I, we're not experts on insurance by any means. And whenever we get like an insurance question, we always we give that kind of like that little warning sign of like, we're not insurance experts. We're not insurance. We don't sell insurance. We can't sell insurance, but here's what we've heard and experienced. But so that's why it's always good to have someone on like you guys that can speak directly to the industry and the specific corner of it that you guys operate in, which is with all risk insurance. So we appreciate having you guys on and look forward to some good stuff down the road with you guys. Ben, you got anything last minute here?
I would just reiterate that this is a huge opportunity to penetrate your customers and bring on new customers. I mean, to be able to dig in and educate a shipper on something is a huge opportunity. Anytime there's an information gap, anytime there's, a lack of information, anytime you're seeing a brokerage agreement where they want to onboard you and they're talking about the stuff that we talked about in this episode, that is a great door to open to be able to speak about these things, talk about how you can help mitigate that risk for a shipper, because when you're adding value, that's how you get more business. That's how you deepen that relationship. And that's how you get customers in a market that isn't like the one a year ago. The market we're in now, you have to find interesting ways to get customers. You have to get creative, and you have to be able to add value. This is a tremendous way to go do this with your existing as well as your prospects, being able to dig into this, and it gives you something else to talk about as well.
Yeah. I think to drive the point home with what you said, if a customer gives you a pain point on the phone and it's about claims or how long it took them to get a claim settled, you don't have to the good thing about all risk is that it's a per load transaction, right?
Yep.
You don't have to say like, oh, we have this ongoing policy that covers this. It's like, no, in the event of any load that you guys have, I can get this coverage for you, and here's how it works, and here's how it protects you, and here's how it unfolds versus a traditional insurance policy. So you have the ability to sell on that, even though, because Loadsure is not you don't have to pay an annual fee and have their coverage. You can literally go per load and get it quoted out. So you have any broker has the ability to go and sell on that. And I can almost guarantee that the vast majority of brokers don't use that as a selling point when they have it available at their fingertips. So agreed.
Yep.
Well, good stuff. Happy Thanksgiving, everybody. Ben, what do you got?
Whether you believe you can or believe you can't, you're right.
And until next time, go Bills. That wraps up this episode of Freight 360. Check out the show notes for links to anything that we've referenced on this episode. And make sure to visit us online at freight360.net to see our entire library of episodes, videos, blogs, and more.
And make sure to check us out on Facebook and subscribe to our YouTube channel for daily and weekly tips and content. If you'd like your question answered on the show, fill out the Contact Us form on our site, and we'll see you next week.